Well, so glad you could join us here on what is now the middle of our trading week already. I'm Marlon Bowling with you, your tour guide to the ag commodities. And, well, with that being said, didn't mean to get all choked up over it. Let's take a look at our overnight trade. And we'll start with our corn market and our quotes provided by Bar Chart. Well, how's this for a flat performance? As we came into the morning hours here, we have September, December, and March sliding across the finish line on the Globex market, all unchanged. So nothing moving at all there after we had been trading on both sides of unchanged overnight. Now, on the soybean trade, we had the market kind of going all over the place last night. We were lower for a while, we were higher. We ended up with the September contract on the soybeans trading 4 higher at 13.27 3/4, and November 2.5 higher at 13.22 1/4. So just a little bit of firmness, but remember, we had that big washout in the trade yesterday. Now, on the wheat, in Chicago wheat overnight, we had the September contract gaining 6 cents. 730.5 was our last trade this morning, just a penny from our high of the overnight trade. And if we take a look here at our Kansas City market, you had September just 2 3/4 cents higher. We're at 710 1/4. And meanwhile, in the Minneapolis spring wheat trade, we had September down 3/4 at 9.19 per bushel. That was still a couple of pennies off of its high of the overnight trade, continuing to lose a little bit of ground versus the Chicago and Kansas City contracts as the spread unwinding continues to apparently be taking place anyway. We are joined this morning by Brian Hoops. He's the president of Midwest Market Solutions in Springfield, Missouri. And Brian, I did not see any overnight export sales announced this morning. Everything quiet once again on that front, and I imagine that's really making people kind of nervous these days.
Yeah, you're right, Marlon. This is a time of year last year where we really saw a pickup in our new crop exports. July and August, we saw a lot of business being done. This year, it's much, much slower. We don't hear a lot of sales being done, as you mentioned. And, it's a function of our price levels where we're at. When we get into August and into early September, we should be encouraging a lot of buying interest as typically, we have harvest lows scored in late September and October, so you'll see some commercials and foreign countries buying and booking product ahead of that time frame. And we just haven't seen that this year. So it's one thing that's kind of taken some of the wind out of the sails of the bull market, that along with some timely rain showers in certain areas. But, now the trade is kind of left to wonder, are those rains enough? And what's the USDA going to do with these yields? Our crop ratings significantly below last year's levels. If you look at corn and soybean ratings compared to a year ago, and that's when yields for a year ago were also below where the USDA is currently forecasted at. So there's a general belief the USDA is going to come down on their yield numbers. It's just kind of a question of how much, and will it produce another leg higher in the grain markets?
Brian, if you recall, you and I were talking Monday about the wedge formation or the coil formation, however you want to call it, on the charts. I know you follow technicals, and this is a look at the September soybean chart that we looked at Monday, the very same chart. Remember how we were talking about that pattern where you had the lower highs all the time, and then you had the higher lows, and they made a wedge, and sooner or later it's going to break out. All right, Brian, there it is, right after we talked. Did we, in fact, break it out to the downside? Does that mean something rather ominous moving ahead?
Well, yeah, from a technical standpoint, it certainly does not look very friendly at all. You broke out to the downside, and we talked on Monday about how you can kind of measure where this market could potentially go by taking, the high and low and subtracting from the breakout point. So that would project prices to move back near those lows at a minimum that we scored back in May. Now, the question will be is fundamentally is that justified? Are we going to see yields fall down enough to support the market in here? But we should see some technical selling. We certainly saw a big washout yesterday, and then just a tiny recovery in the overnight markets. And the question will be is, today, what do the funds do when they come into work? Do they start selling into this market and pressuring the values once again, or can we stabilize here and at least try and trade in an inside session and consolidate after big losses?
So a quick question for you before we get into our break. Has there been some active rolling on the part of some of these large funds I know you always hear about, for example, the Goldman roll. Has that been going on? Is it done? If it is.
Yeah, for right now, most of the rolling has been completed. Most of the activity is in like the December corn, November soybeans. Once July kind of went off the board, the fund traders rolled everything into the next major contract. A lot of the end users, commercials rolled from July to September for their cash markets, and they'll do that again here soon, moving from September to December, so that they are doing their cash markets off of that new crop contract.
Okay, well, Brian, we'll take a break right here, and then we'll take a look at our livestock and how it is set up here this week. In the middle of the week, we're talking with Brian Hoops. We'll be right back. Well, we're talking with Brian Hoops of Midwest Market Solutions. We talked about the grain side. Brian, let's review where we wrapped up yesterday in our livestock trade, and we'll take a look at our quotes here provided by Bar Chart. So yesterday on live cattle, you have to kind of take that August contract with a grain of salt here. The October contract was 87 cents higher at 128.15, and that far outperformed the deferred contracts. They just didn't gain very much at all, especially if you go a little further out. Now, they're already at a pretty steep premium out there, so they were narrowing up that spread yesterday. On the feeder cattle market, you had the September contract 55 higher yesterday on the close at 162.52. It was about $1 off of its low of the day, but it was also about $1.30 off of its high of the day, so kind of stuck in the middle there. October was 57 higher. Let me stop right there. With that turnaround that we had in the corn market yesterday, where it turned and went lower about mid-session, were you disappointed in that performance by the feeders?
The feeders did kind of try and rally and then pull back off their highs when corn started to rally back. So, not a real surprise to that market this week. We did see a little bit of cash cattle trade developing already. Some string sells every Monday. It looks like in the Iowa, Nebraska region at 125 is where they traded. Yesterday, there was more trade on a live basis in the north, 123 to 125 again. That's steady to fully $2 higher. And in the Southern Plains, we saw some 120 trade. That's a steady market. And really, that was considered kind of a victory for some of the trade, that we traded steady instead of lower money. So most of the strength is still coming out of the north regions, and we'll see how trade develops the rest of this week. But if we can be steady to a couple dollars higher, that's going to be seen as a positive, especially when you have cutout values continuing to move higher. We may find a little bit of pressure right out of the gate here from that ADP number that came out this morning. That was a disappointment and is weighing on the stock market. So it could initially here pressure the cattle market on the opening.
Okay, we'll take a quick look at lean hogs here as well to see how we finished yesterday. In case you missed it, big gains on the nearbys. October up $1.87, and we settled yesterday at 91.37. And as Brian alluded to, some disappointing jobs data that came out a little bit ago. We'll see if it has an impact here on the ag trade. Thanks, Brian. Appreciate it. Brian Hoops of Midwest Market Solutions. Janet, the floor is yours.